Plenty of people are familiar with the phrase, be careful what you wish for. Well, for maybe 20 years, people have been asking for lower home prices. And it looks as though in 2026, people are going to be getting their wish. So there's good news and there's bad news. For people who are homeowners already, for the first time in a very long time, they will see the equity in their properties start to decline. It's already happening. Many experts are expecting that to continue throughout pretty much all of 2026. Of course, it depends on where you are in the country and how things play out. But certainly here in Ontario and in British Columbia, there seems to be a softening of prices. And it seems to be that the quick run-up that happened, especially in the aftermath of interest rates being extremely low until 2022, is starting to play itself out only now in reverse. Think about what happened and think about how we are possibly at the end of a credit bubble and a credit cycle that has run its course. Interest rates went from being all-time high in 1981 or so until pretty much down to zero in 2022. That's a 41-year-long tailwind that helped pretty much all capital markets. It helped stocks, it helped bonds, and it helped real estate because interest rates are really just the price of money. And as the price of money went down, people were more prepared to borrow more so they could get a little bit more on the understanding that prices would go up. And there was an understanding that a lot of people would say real estate prices only go up. Well, prices have now started to normalize for the first time in at least one and maybe even two generations. Interest rates hit an all-time low in 2022 and started coming back up. In what have been tailwinds are now headwinds. And we now have rates going up. And because of tariffs and because of uncertainty and because of a war in the Middle East, we now have the threat of job losses and people are no longer as stable in their careers as they once were. So that's starting to soften real estate prices. But perhaps the biggest thing that's happening is that mortgages are up for renewal. When the COVID crisis hit in 2020, interest rates were brought down to zero and people backed up the truck and bought all the real estate they could. A lot of people were taking out second mortgages and buying second properties because the cost of carry was so cheap because mortgage rates were so very affordable. Well, a lot of the people that took out mortgages in 2021, let's say, took out a 5-year mortgage, and those mortgages are now coming up for renewal. Well, guess what? Interest rates have gone up. Therefore, mortgage rates have gone up. Given what's going on in the war, there's a strong consensus that mortgage rates will actually be higher in the not too distant future than they are right now. All of that will put more pressure on real estate prices. Therefore, if you are considering getting into the real estate market, 2026 will likely be the first really great opportunity you have in a very long time to make it work. I hope you consider it if you're looking at buying, and I hope you have the wherewithal to continue to make your mortgage payments and to continue to live in the home you love. In fact, that's what it was when you bought it, so that you can not feel pressured to do anything uncommon or reactionary so that you can live in the house for as long as you want. Good luck. This has been Weekly Wealth Update, a Make Better Wealth Decisions podcast dedicated to explaining how current events impact your portfolio and the wealth decisions you make. Tune in for commentary on how the news of the week affects your portfolio and your thinking.